With assets like real estate, cryptocurrency, collectibles at all-time highs, is it a good time to invest? Is it too risky to invest now? Or is it just simply too late? In this video, we're going to discuss exactly why I still think we're extremely early and there's huge potential for upside. Keep watching. Hey guys, my name's Ravi. Welcome back to Personal Finance with Ravi Sharma. On this channel, we're talking about all things finance. We're talking about passive income, personal finance, financial independence across real estate, cryptocurrency, and collectibles. If they're topics that you really want to learn about, then definitely subscribe down below. And of course, check out all the videos I've been making over the past year on this channel. A question I get asked quite often is, Ravi, are we early? Are we late? Is it too late to invest? All-time highs? Is it too risky? And in this video, I'm going to break it down to you in the most simplest way I can. It comes down to mindset, but it's also about understanding what market you're actually investing into, what type of asset you're investing into, and timing the market versus time in the market. That's the topics we're going to discuss in this video. Now, if you're new to the channel, you don't know, I make some whiteboard videos sometimes, and my writing and drawing abilities are absolutely terrible. So I ask for you to be patient, but the fruits of this video are what you really want to take away. I'm sure you'll grab some really good value from this. I provide a lot of context around why I think potential things will happen. So if you are interested, keep watching. Now, why do I think we are still early, and why is it important to know if we are early or late? Well, firstly, if we're purchasing properties or we're purchasing crypto or real estate or anything along those lines, we need to know where we are in the cycle. Now, for me, I've been saying across all my socials, we have about 3 to 5 years, right, to create generational wealth. And I'm not talking just about crypto. I'm not just talking about real estate. I'm talking about, in general, the next 3 to 5 years is massive. Why? Because of this. Now, for those who don't know what stimulus is basically the government that has been going out and making the machines go brrr. Basically, what that means is they are printing so much money and have printed so much money over the last 12 to 24 months. Now, why is this important? It's important because as we have more money come into the system, that means the value of our dollar decreases. I've said this across many videos. I've got one notably talking about debt during an inflationary period, which you should definitely check out here. So why this is important is because what happens when there's more money in the system? Well, it means our dollar value drops, and that means asset prices increase. That's because we have more money available to us. It means that we can't just go out there and say, well, our money's worth more, but now we can go and purchase whatever because the dollar value is now greater than what the asset prices are.
It doesn't work like that.
However, there's a unique time in between when it is actually realized in the system. Now, stay with me. If you're a little confused, you're not alone. What I mean by this is that if in 2020 and 2021, we've done all of the printing of the money, right? So the system goes brrr, brrr, like that's the machine making the noise. And they go out and they print all this money. However, for this to actually find its way in through these assets, it takes time. Hence why, despite seeing all-time highs across these asset classes, I still think we're very early. It's very important to know this because I'm going to illustrate in a point when you're looking at, say, something like real estate and how your level of risk over time actually increases by not getting in earlier. The same thing happens with cryptocurrency, and I'm going to break down both examples in this video. So let's talk about real estate first. If you were out there looking at purchasing a property, an investment property or home for yourself, you're really questioning right now,
Hey, I don't know why I didn't listen to this guy
when I was looking at his videos 12 months ago.
Yes, I predicted that we were going to enter a national property boom last year when most economists were saying we're going to crash by 20 to 30%. At the time, not many people believed me. There was no credibility because, well, I was new on YouTube. Plus, no one had actually heard of me up until I actually came out more publicly. Now, 12 months later, I'm saying that I would like to be historically correct rather than put out some fluff here to make a quick extra couple of dollars. For me, it's important that I'm growing a community here with you guys to actually go out and do things. I'm not talking about,
hey, come on to YouTube or come read a few articles and say, oh, whoop-de-doo, now I know what's happening in the market. I'm going to go back to my shitty job and do whatever.
At the end of the day, none of this is financial advice, but more importantly, None of this actually gives you a return on investment, because if you don't actually act on this information, it means zero. It means nothing. So I'm prompting you, use these videos as inspiration to actually go out there in your own lives and start investing, start strengthening those muscles for investing, because for far too long, we've been taught about traditional shit, which is,
hey, let's save our money and hope that our properties that we bought so emotionally
are now going to go up in value and we get to live in a house, work for 40, 50 years. If you're here, you're probably not wanting to subscribe to that life. What you are wanting to subscribe to is this channel, because for me, my purpose here is to build a community of like-minded people that are actually wanting to innovate, but also initiate and execute on their plans. I'm going to show you how we can get in early into real estate still in 2021. So let's say you buy a house, right, in 2021, when the world's gone crazy and everything's at all-time high. The same property that I could have purchased last year for about $285,000 is now going for about $300,000. So let's use $300,000. Now, for all those who are new to the channel thinking, where do I find a house for $300,000? I'm a very big regional fanboy. I'm a fanboy more so of making money and getting financial choice. If you're interested in knowing exactly how I'm purchasing for my clients, check out the videos on this channel. But more importantly, if you're wanting to execute, you can head across to my website and you can book in a strategy session with myself for 45 minutes on a video call. On that session, we basically break down a roadmap as well as a strategy for you in terms of when you're coming to real estate. So you go and purchase a $300,000 home in 2021. Now let's say in 2022, it grows by 10%. Now 10%, and the new value of this would be $330,000. Okay, now where am I getting these numbers from? Why am I thinking 10%? Well, let's look at the most conservative people in the market, being the RBA, the Reserve Bank of Australia. They came out and said, well, look,
conservatively, we think 30% over the next 3 years.
so if you divide that, that's 10% every single year, compounded. Now, personally, I want to outperform the market. I'm not looking at average, and I know exactly what this market is looking like in terms of the inflation, and the asset price inflation, more importantly, is coming through the system. To give you an idea, 10%, 15%, even 6 or 7% is not normal. When we're looking at Australian property over the long term, yes, sure, there are some places that have performed really well, and then there's others that haven't. I'm talking about areas that even for my clients that I bought in the last 6 to 9 months have grown by 15 to 18% in the space of 6 to 9 months. So when I look at 10%, I'm saying conservative, but beware, this is not something that's going to stick around forever and I can put money into real estate, get leverage returns of 10% every year. It's not going to work like that. That's why I say 3 to 5 years is what we have. I think we see a correction after that, but I'm going to illustrate how that's important about when you're starting early. So you go in 2022, the same property is costing $330,000, and then you go to 2023, and let's say it grows by another 10%. That means it's $363,000. And then finally, 2024, so a period of 3 years of growth, 3 years. And here is another 10%, and that would take you up to roughly $399,000. It's not bad. If you were getting 10% per year, your initial $300,000 property is now worth $400,000. What's more important, why I actually push towards real estate is because to get the 300K property, the asset, we don't have to put in $300,000. We have to put in about 10% as a minimum for the bank. So if we put in 10% plus all of our other costs, we could be forking out about $50,000 to $60,000 to purchase something like this. Now, if you're putting in at a very high level, you're putting in $60,000 to acquire this in 2021, and we have that sort of conservative growth for the next 3 years, well, that $60,000 has made you $100,000, and you're going to go to sleep very well tonight. But what my focus here is, it's not just about being early and, hindsight's great because you can look back and say, well,
If I could invest in 2021 and I knew that was going to be the growth, well, I could have done this 20 years ago.
And that's where it's about the importance of understanding economic cycles, understanding where we are at in the broader economic cycle, as well as knowing what's happening on the ground. Now, for me, I run a buyer's agency. You can definitely go check out all that information on our website. But for me, it's important for our clients to get into areas where it's not just about timing the market, but time in the market. Now, why I think we are still early is because we've had the stimulus being printed, we found all this money in the system, it hasn't really found its way into all the assets to the level it should. And that's why I say that a lot of people are still defensive. When we see a majority of people, like at the moment, we have about 90% of people that are defensive, right? They're on the defense. As you can see, my handwriting's amazing. 90% of people are defensive at the moment. If you are looking at upgrading your mindset, subscribe to the channel. You're gonna find someone who talks some real facts and gets you to actually go out there and do shit. Now, 90% of people are defensive, yet we are seeing all-time highs, right? All-time highs on a lot of assets, like say real estate. Now, what happens when this 90% actually goes down to 80%? Well, it doesn't look like much, but that means another 10% of people are coming into the market, and we haven't seen that yet. This is why I'm saying being early is actually very good for risk management as well as growth. Because if we end up seeing, and I get asked this a lot, is we've gone from 12 months, so 12 months ago, economists and bank people and all of these editors were coming out and saying, we're gonna see a correction of 30% across the Australian real estate market.
Which I came out and said,
Well, it's a load of shit. I think we're going to go the other way.
And what we're seeing now, 12 months later, is these, editors are now going,
Oh my God, you're going to be selling property.
but essentially, if you're able to get into a property and you wait and you see, okay, well, we may have a crash, so I'm just gonna wait and see what happens. Well, I'm telling you that we're still early. Now, none of it's financial advice, you should do your own research, but based on everything that I'm doing, we've got a team dedicated to researching this stuff day in, day out, and we're talking to like over 15, 20 agents a day. We know what's happening on the floor, and we know that this number is slowly going from 90% to 80%. As this number falls, you're gonna see more people enter the market. When more people enter the market, we have more demand. When more demand is there, we're gonna see a lack of supply, and the combination of that results in price increases. We've been seeing this, and I know I'm probably one of maybe 2 or 3 people on the internet that are right now saying we are still early, it is still a good time to buy real estate and other asset classes. And if you're thinking now, 12 months ago, you were thinking, oh, market's gonna crash. Now you're thinking, oh, market's gonna crash because it went too high. You're gonna be mistaken, and you're gonna be left sitting there hoping that the market's gonna crash, when in fact, it's never gonna come and see these times again. And I'll say why this is important. So we have 10% of growth every single year for the next 3 years. So if we do see a correction now, right? Let's say there is a correction. So we see a correction, and the correction is 20%, right? Economists, there were plenty of banks coming out saying, hey, 20% could be realistic. So if we're at $399,000 and we see in 2025, we see the market go down by 20%.
Oh my God, 20%.
If we see that market drop by 20%, we are now coming in at $319,000. First question you've got to ask yourself, and this is why so many people that were coming out and saying,
Oh, well, JobKeeper's ending, JobSeeker's ending, oh my God, Home Builder's ending, all this other stimulus is ending.
that means the market's going to collapse. There's people who clearly didn't do their research and they said,
oh, that makes sense. That makes sense. Yep, March is when the market's going to collapse.
clearly it didn't happen. The opposite happened. And all those people that listened to the idiots, well, they got screwed over, right? The point is that we've got to figure out, why would a property that's worth 400K drop to 320K? And we've got to see what's happening in the market. But for whatever reason, let's say it does collapse. Now, personally, I don't think it's going to come in the next 3 to 5 years. I think 5, 6, 7, 8 years is sort of the window I'm looking at, possibly a correction, because it does get overheated. Not because more people can't afford, but because bank regulators, APRA, all these people are going to come in, create some buffers, which means access to credit becomes a lot more difficult. That's what I think is going to induce the next sort of correction. But why it's important to come in early, because if we purchase in 2021, we purchased at 300K. Now, you're looking at real estate as a long-term investment, right? So if we purchase at 300K in 2021, you're probably looking to hold for about 20 years. You looking at movements like this, right? Looking at movements like this doesn't affect you. Because if you've looked at the fundamentals and you've looked at an area that has really good rental demand, you're going to get the cash flow, right? So if you're getting the cash flow and you're able to hold the property despite corrections like this, you're going to be better off. Now, here's the big kicker. If you get in here a 20% drop after these years of growth, you're still going to be in positive. You're still going to be in profit. If you purchase a year later, you suddenly sort of move sideways, 330 to 319. Where the risk continues to increase is as we go through this next cycle, the longer you wait, the more exposure you have to a correction. Because if now you wait and you say,
Oh no, I'm frustrated, I'm done, I am getting into the market, I've been seeing it for the last 2-3 years, this is it.
so you get into the market at a time where it's a little bit more riskier. Now, if you have a correction, now you can see significantly a big dip in what your equity position looks like. Now, personally, as I've said, the next 3 to 5 years is the window I'm looking at. If you are looking at retiring, if you're looking at creating generational wealth to leave for your kids, this is it, right? The next 3 to 5 years, the growth that you're going to see is going to be unlike anything else. We've already seen some stats come out where the growth in the first quarter of 2021 when it comes to real estate has been at an all-time high. The last time we saw growth like that was 32 years ago, okay? That should give you context about what is happening right now. So by investing early, you're reducing your risk and you have the upside for growth. But this isn't just unique to real estate. This actually applies to other asset classes. Now, if we look at something like cryptocurrency, which you guys know I'm heavily invested into and I believe in at a core that it's the long-term decentralized finance, the blockchain technology is what is going to drive our future, right? If it's internet, web 3.0, whatever they like to call it, it is going to play a large part in our future. So if we even looked at, say, something like crypto, if you invested, say, 5 or 10 years ago, yes, you could have got into Bitcoin at like $1,000. Now, reaching the all-time highs and where it's at, you're probably going,
Oh, hindsight's great. You know, like I wish I invested back then.
now, crypto being so volatile has corrections like 20%
Oh my God, 20%.
on the daily, right? It moves up and down. But the more important thing here to learn is that because you're in early and you have time on your side, you are going to do really well. It reduces your level of risk, especially if you're investing money you don't really need on your day-to-day. This is why I look at properties that have not only the growth potential, but also cash flow. This is important, right? Too many people have been focusing on the traditional stuff, which is,
Oh, I just want capital growth. That's why I got into real estate. Oh, get some tax benefits and shit.
no. It's about how you understand that asset, not how it worked 20 or 30 years ago. We're looking at the principles, we're learning it, and we're applying it to the fundamentals of what happens today. We have printed more money in the world than we've ever done, ever before. So why are you now listening to the people that taught you shit 10, 15 years ago, when in reality, the world is changing and it's moving faster than ever before? Right now is a great time to invest. If you are looking at sort of, hey, all-time highs, it's too risky, it's gonna collapse, you're always gonna sit there and hope it's gonna collapse. We've seen things like real estate being such a safe investment. Over the long term, there's one trend, it goes up. Right? If that's what you're looking at and you're really trying to understand it more, check out the videos on this channel, reach out to me if you need some help. And if you're looking at getting started in cryptocurrency, you can find a link in the description below. Get $10 free Bitcoin if you sign up to CoinSpot. You get it automatically, you don't have to do anything. So definitely go check it out and start learning about the new spaces that are around. I'll catch you guys in the next video. Thanks, guys.